I am Sergio Mello, and I'm the global head of stablecoins at Anchorage Digital, which is a crypto platform for institutions. We have a digital bank called Anchorage Digital Bank, first crypto charter bank by the bank regulator in the US. We issue stablecoins, and we offer stablecoin services for banks. A lot of banks world. There's another banker here.
Thank you. Myles Harrison from AMINA Group. We're a regulated crypto financial services group. We are headquartered from our Swiss bank, where we've been a bank since 2019. We also have a SFC licensed entity here in Hong Kong. And more recently, we got a CASP license through the MiCA legislation in Austria.
Hey everyone, I'm Ben. I work for Synthetics as the CEO. Synthetics is a DeFi protocol, specifically working in the perpetual space. So we've spent the last year just redesigning our strategy, and we've come out with our product a month ago, and that's a perp protocol on Ethereum mainnet.
Nice. Hey everybody, I'm William Campbell. I'm the project lead for USDKG. We're a project based out of Kyrgyzstan, and we're very special because we're the world's first institutional stablecoin that has gold as collateral, but is pegged to the US dollar. It's a big project centered in Kyrgyzstan's new innovation for their digital technologies. Yeah.
Why don't we start from there?
Yeah.
Tell us more about the specific regulation that enables that to happen on the ground.
It's actually a great question because the government decided that they wanted to do a top-down strategy. It wasn't that projects went into saying, how can we navigate the laws? No, they started changing the laws as far back as 2021, 2022. So they made digital asset laws. They allowed people to become virtual asset service providers, VASPs. And so they made the atmosphere that allowed everybody to come in. And so we've been taking advantage of that, which is, what every government should do, right? We spoke about Genius, right? Before Genius, people didn't know what to do. And now that that framework is there, people can go.
That's amazing.
Nice.
Generally speaking, the regulatory landscape has changed so much in the past year. Genius, MiCA also earlier in Europe, Asian regulators, Hong Kong coming soon, Korea coming soon, Singapore already announced some plans. There's a lot happening. How do we navigate this globally? How do we decide where to use stablecoins and how to use stablecoins where we cannot use stablecoins? Do you have experiences on the ground on understanding where you should go first or where you should not go?
I think it's quite a challenging question because you do have these like different frameworks coming out of different geographies, and I think that does make for like a bit of friction and fragmentation and potentially regulatory arbitrage. But I think what we've ended up in is this situation where there's now widespread recognition where there probably wasn't 4 years ago that we do need regulation, and we have banks, we have large financial institutions that want to play in this space, which has kind of forced regulators' hands. But I think that the way that it's come about in this like per jurisdiction manner for an asset that's, I guess, intrinsically global in nature has kind of resulted in these, I guess, nuances that make it a bit difficult for some, like where you can go to certain jurisdictions and you can have like a lot of liberty with what you do with your stablecoins and how you interact with them and how you get them and what exchanges you can use and what banks can do. And then you go to other jurisdictions where banks will block you from sending money to exchanges or from getting money or getting money from exchanges. And I think that situations like that, where even in like very like regulatory jurisdictions, there's still this kind of friction, has made it a bit of a confusing space to navigate. That can make it like still very daunting for people to onboard. And so I think I guess interjurisdictional clarity is something that's widely needed, and I think we're getting there. It's just a bit of a slow process.
I feel like I wish they would talk to each other more because some countries do it really right, and then you go to others and they're not at all. And I don't understand why most other global laws or things like that, governments talk to each other and they say, we're going to put this framework. Do you guys agree? Let's all put the same frameworks together. But with crypto, it has not been like that. It's been just the complete jungle, you know? So I wish they would talk to each other more.
Yeah. Almost looks like governments should agree on whether the cars should be on the right or on the left side of the road, right?
Yeah, good luck with that.
I think it's also important to remember that it's not just around the regulation and the harmonization, but we're seeing different use cases emerging, in different countries, different jurisdictions, and the adoption of those use cases is at different pace and different maturity levels. That, for example, stablecoins as cross-border payment or even payment within a certain geography, is the adoption level is different in different parts of the world, and that's also because sometimes the incumbent solution isn't broken. I think for many of us that have been in the crypto space for many years, there's always been this overhang of trying to solve problems that don't exist, right? And actually, how do we distill this and make sure we're solving problems that are genuine? And I think what we're seeing now, alongside the regulatory harmonization that we absolutely need, is looking at whether it's individuals making payments between accounts, whether it's corporate treasurers that are looking for solutions and how they manage their group treasury.
And I think that's a kind of fair point that both of you raised, in that I think there is definitely per jurisdiction regulations. It does have to take place depending on the specific use cases, and I think even things like MiCA, where they just don't want dollarization across Europe. And so there certainly are per jurisdiction things, but I think it's probably it even needs to be raised a level to even beyond jurisdictions speaking to each other, but these international bodies the Bank of International Settlements or the FSB really kind of overlaying and providing guidance in a cross-jurisdictional manner, so that we do get this harmonious interaction for, again, what is very intrinsically a 24/7 global asset.
Yeah, you mentioned an interesting point, which made me think, how can we then, not to get into a political talk, but political parties always change, and so agendas change. And so one political party might want to make an act or a framework, another one might not. And it made me think, as you were talking, how can we protect crypto so that when a new political party, when whichever country that may be, comes in, they don't destroy all the good work that may or may not have been done? And I don't really have an answer to it, but I think about Brazil. Like I mentioned before, we have a good framework in Brazil. Crypto works really decently well. And I'm worried, if a president or a regime changes ever, what if they destroy all of that? And that would be really sad,
But I think on that point as well, when we talk about the regulation that's emerging around the world, it starts to, finally for many of us, legitimize. And we are seeing institutional movement into this space. And I think that we are de-risking that volatility when governments change, because it becomes more entrenched. So if we take Europe as an example, that from March this year, stablecoin payments will be covered under the Payment Service Directive, and that's a big change and a big shift. That's going to open up a lot of, we know Visa and the likes of MasterCard are working heavily on how they bring stablecoins into payment infrastructure. And once that starts to become more embedded, that's a lot harder to suddenly remove overnight.
No, you're right, for sure. Yeah.
I think this is where we're going next, but I don't want to leave this unspoken. The various challenges that we're seeing compound here is dollarization, sovereignty, geopolitics, local regulation. So should governments that are not the US government have their own framework for their own local currency issuance and try to promote that over dollar, or should they embrace dollar? Is the Genius framework for reciprocity going to be the final answer, or are we staying more towards a multi-jurisdictional compliance where the same token can be regulated or re-regulated and sub-regulated or compartmentally regulated separately in another jurisdiction? There's a lot of questions here, but I want to hear from you that use the stablecoins on the ground. Yeah. What do you think is going to happen?
You said a lot of questions. I will take a little bit on the first one. It is hard to choose a currency because every country wants their currency to be used. But just for the ease of things, I think that dollarizing is good for crypto. Or else, aside from all the battles that we already have with crypto, we're going to start having battles about, no, we want to dollarize the Turkish lira or tokenize the Turkish lira or this or that. And so maybe finding a consensus of, stable coins, so USDT, USDC, and other ones like that, we should dollarize, we should focus on that, and then grow from there. Yeah.
Yeah, I mean, I think I love the idea of dollarizing. As an Australian, I shouldn't say that, But I think, like practically speaking, I think we've seen it probably most recently in Europe, where like when a government loses control of its like monetary policy powers, it's very difficult for them to actually like stimulate or promote the economy when they have to, or slow it down when they have to, so they can kind of create this, I guess, nice, sustainable economic pace. So I think dollarizing is a very sensitive topic that probably does need a lot more thought. But I think for things like trade, and I think if we step back and go like, what do people actually want to do with stable coins? I think at the minute it's it's a lot of use cases of cross-border payments, people using people putting like stablecoins onto cards and paying in their local currency, and someone in the background doing the conversion, or use it like in crypto in DeFi on exchanges to trade for Bitcoin, Ethereum, whatever it may be. And I think like all of these regulatory frameworks at the end of the day really just like very simplistically need to make sure that I think the point I'm trying to say is they don't necessarily need to over-regulate at this early stage. They just need to provide enough protection so that like when people use these coins, they know that there's actually a dollar and it's not going to fall over, and there's something backing it, and there's audits in place that you'd have with any other traditional asset. And I think that again like just legitimizes stable coins and makes people a lot more comfortable to actually use them in for whatever use case it may be.
No.
Yeah, I think from my perspective, there's a little bit of over-focus on dollarization in terms of this space, and it's a question that I get, typically wherever I go in the world, and I think that we were having a conversation backstage. I think we need to remember that there's many new use cases emerging for stablecoins, particularly as we have this new legislation coming in and the institutionalization. But we shouldn't forget that stablecoins originally were the gateway between traditional finance and DeFi. And actually, when you look at exchanges, for example, many of the trading pairs are still against dollars ultimately, right? And there's reasons for that because of liquidity being a primary one. So we shouldn't forget that is still the number one use case for stablecoins. Yeah, we've got cross-border payments coming, tokenization, settlement of real-world assets, treasury management, but it is still very much the gateway between TradFi and DeFi.
Yeah, and again, like I think, even when you have DeFi is a sensitive system. Like any of these big financial systems, even in non-crypto land, are very sensitive systems. And I think speaking to like where regulation can help is like we even saw in a highly regulated jurisdiction like the US when Silicon Valley Bank got shot, got taken out to pasture. We saw USDC depeg. And that just created chaos, like absolute chaos. And not only for like DeFi, where people who thought they had a dollar that did in the end really have a dollar, they might have got like liquidated on positions, they might have got, they might have lost a lot of value in trading pairs or whatever it may have been. Same with people using it for cross-border payments. Like you thought you were getting a dollar, and at the time that's happening, you're like, am I getting 90 cents? Or like, and so I think things like that, even just providing this regulatory framework that does allow for a stable coin to be a dollar and not have the worry of depegs is just hugely valuable and hugely important for the prosperity of this space.
Yeah, and when we talk about MiCA as well, one thing that MiCA does do well, I think we've all waited many years for some legislation. I think some people are quite quick to immediately criticize. But one thing that MiCA does do well is it provides confidence for consumers. They can purchase a stable coin knowing exactly what instruments can sit underneath that, how the reserves are made up. They know that they cannot be rehypothecated. And this is really critical if we really want to grow on that adoption curve and we want to get to the early majority and late majority as an industry. This is exactly what we need, this transparency and trust.
That's the danger. You want the platform of frameworks for regulation, but you can't have too much of it, and that's really hard because you never know what they're going to do. So I'm never a big fan of regulation. Years ago when I got into crypto, I was actually, and I'm not anymore, but I used to be scared of all these regulatory frameworks they were talking about when I heard about MiCA years and years ago. Thankfully, I was wrong. They have done really, really well. Let's just hope they don't over-regulate like everything else,
And I mean, you're right. I think I'm going to go unconventional here and ask the moderator a question.
I love this. It's a great conversation.
like, I mean, SARB 121 was a classic example of me of like over-regulation and creating a protection that didn't need to be there. And I assume like as a US bank, it was something that like was just hugely capital efficient. Because even holding stablecoins on your balance sheet, I assume were just like it was almost intolerable.
Many industry players have PTSD from the previous administration's events, but now everything is really looking better and brighter. So we're very happy we're going this direction. And specifically at Anchorage Digital, we have a history of 5 years of being regulated by the bank regulator. And to conclude our conversations about regulation, having the oversight of a federal regulator is very tolling, and it's a big endeavor. It's a big commitment, but at the same time allows to have conversations with the biggest global financial institutions or new entrants like retail companies, like traditional payment companies like Western Union, and come to us and understand that with that stamp of approval of a federal bank regulator, we can provide the services and the systems and the comfort that they need. So it is useful in the end. It is very useful. We just want it to be done right for the sake of stablecoin distribution and global financial system stability. You said something about payments earlier. You talked about Visa, MasterCard settlements. I think that's a great point of interface where stablecoins actually come into play in the daily money flows. We're talking trillions of dollars equivalent of money moving every day. How is this going to happen next? Why is it better now? Is there enough liquidity? Is there enough comfort for those clearing systems to start accepting stablecoins on a daily basis? What are the advantages?
Yeah, so quite a lot to unpack there, but I think one thing to touch on is that from our perspective, we're very much seeing a lot of building going on. We are seeing the change of the financial fabric. There is still some friction there at the moment. That's what will be holding back adoption at the moment, and that is particularly where you still need to on and off ramp throughout the journey. We very much live for a world in the near future where we're not talking about on and off ramp. That you can go from start to finish. That I can pay for my coffee using a stablecoin, and that merchant receives a stablecoin. That I don't need to, go in and out of fiat, which still needs to happen, particularly as it goes through the traditional bank clearing system, right? That still happens today. So that's how we're looking at it. We're working with the likes of Visa, MasterCard, but also pioneers in the Web3 space like Ripple as well, who are really changing that. What we are seeing as well, one thing that we're seeing emerging is corporates looking to start to pay employees, including contractors, gig economy workers. These are people that typically pick up a few hours of work and don't want to be burdened with high transaction fees that normally come with cross-border payments. So that's something that we're seeing really emerging at the moment.
This is an area where I don't get too much about, so I actually wanted to ask you that friction that you speak about. We want everybody to come and go to your local bakery and buy some bread with your card and it converts and all. What is the biggest piece of friction that you see today? Because in my mind, it would be, you have your card with USDT, you pay, and the whatever payment processor you're using would convert it in the background. Is there something more? Is there something that's adding friction that we can take away today?
If I can make an example, comparing the fiat world and the blockchain asset moving world is a bit like comparing two languages, where on one you write left to right, and the other one you write right to left.
Okay.
And you have those, and you're trying to overlap them and make page to page or paragraph by paragraph alignment.
Right.
That doesn't work. So fiat world has very clear cutoff times and freeze times and speeds. Clearing, settlement don't follow always the same sequence and time frames. Whereas on digital assets and blockchain type digital assets, you have a transfer and a settlement at the same time. There's no separation between the clearing and the settlements. So reconciling these two worlds is the hard part of the interface between fiat and crypto, and that's why big crises like the one mentioned before happen, because you have to wait over the weekend to see what happens on a Monday. You have the one is halted out of the system for some time before they can restabilize, re-arbitrage, and participate in the system.
Okay.
And just to add to that, I often talk about technology is, people tend to think technology is the biggest problem, right? That the traditional banks are not able to integrate or to come on chain. They have huge budgets. They can. Technology is not the blocker here. It's really the compliance and risk frameworks that come with that. So if I'm going to start accepting stablecoins, I need to really understand what I'm looking at. What is my on-chain due diligence telling me? Where have these funds come from? Okay, it's hit a tainted wallet. What do I need to do next? How do I report this to the regulator? What regulatory framework am I operating in locally, but then what do I have to contend with across the world? So these are the challenges that we talk to many trad institutions, as I'm sure you do on a daily basis, and this is what they're all trying to figure out. It will happen, and it will happen very soon, and then we'll see a monumental shift for sure.
How far do you guys think that banks are off warehousing stablecoins and treating them like a dollar? And what I mean by that is to, I guess, reduce this friction, the baker in that example, they want dollars at the end of the day. They want dollars in their bank account because their suppliers all trade in dollars, not stable coins. Yeah. But there's no reason why the bank couldn't warehouse that stable coin, give the baker the dollar, and the bank in the background can use that elsewhere, do something else with it, repurpose it, or just redeem it.
I have a couple of things on that. It is an ideal world where we agnostically see dollars as dollars, money as money.
Yeah.
In their tokenized form and in their bank ledger M2 broad money creation form, so bank deposits. It's happening at some point. We're getting there. Yesterday I was at a launch event for one of our clients, stablecoin. OSL from Hong Kong launched USD Go. It's a stablecoin for enterprise and payments. And their brand for the launch is no ramp. So we have to think about a very near-term future where the ramp is an old concept and all money is the same, and it's preferably on chain, but really you shouldn't have this interface friction. From the Anchorage standpoint, we clearly have developed some experience in optimizing the fiat rails, optimizing tokenized money market fund buckets. Having different partners and access to fiat, and also having the stablecoin issuance all in one single house. That's how you can optimize for the friction between fiat and stablecoins. Of course, it's a very centralized solution, but if a very centralized solution doesn't give you that problem of reading from the right or left, you just have the content there, and you ask ChatGPT for the final solution. That's probably the best example I can give to show you what the world will be with fungible money on chain.
When you said make money just money, it brings up the point that there is another way. Of course, I don't know which is easier, but another way to resolve all these issues and the friction. Instead of having these payment transfers and the rails change everything, why not just make a way that everybody accepts the crypto in its native form and wants to use it? That might be harder in a different way. It's more time, and you have to let people accept this change. But that would be what you're talking about, is money would be money. There wouldn't be a change anymore. We would just accept USDT or Bitcoin wherever we go. And more people are doing that. I feel, of course, there's first world countries and third world countries have a slight difference, especially because in third world countries they don't prioritize holding USDT. But I already feel like there is a change where if I got paid in USDT, I want to keep my USDT, especially because so many people already accept it. So maybe take out the friction, I should say, by making money, which is what you said, which I like.
Yeah, to scale that, you need all the institutional participants to also feel the same.
Yeah.
You can also speak for your perspective. Quickly, we have a project ongoing with the Monetary Authority of Singapore that is supervising Project Bloom. It's an initiative where banks in Singapore can do interbanking clearing and settlement of dollars on chain with the participation of Anchorage in the middle as a custodian. And only when you get the comfort of very large institutions to consider a dollar at any cost, then you will have that trickle down to retail and consumer. Specifically, today we will live in a world where most regulators haven't still clearly defined what the capital treatment for high-quality stablecoins and regulated stablecoins is. So in some cases, a bank may take a capital hit of 1,250% for holding a stablecoin. In other cases, it's zero, it's a cash equivalent. And obviously, reconciling this is very important and necessary for the next iteration.
Yeah, absolutely. And from a Swiss bank perspective, we're able to hold stablecoins off balance sheet, which provides additional consumer protection, but also helps us from a balance sheet management and accounting perspective. And you touched upon why aren't banks doing it. We speak to a lot of banks around the world, and they're still trying to figure out what that treatment looks like for them and what implications there are. And it's all good for a product team to be pushing it, but then you've got the finance teams and the treasury teams that are coming chasing you as to how they're supposed to account for this and what it might actually cost the bank. And particularly if they need to close a position overnight. And that becomes very, as Sergio touched on, it's easier in the TradFi world because you have an opening market open and close, right? From our perspective in our world, it's 24/7, 365. So those lines are very much blurred, for sure.
Nice.
How about DeFi?
DeFi,
I know you have strong opinions there.
Yeah. I mean, DeFi simplistically just wants to know a dollar's a dollar. I think it's like stablecoins are still, I think the most prolific use case is still in DeFi. And I think that having a robust, globally utilized stablecoin is very important because, again, DeFi is like innately a global product. It's permissionless, it's accessible by anyone. And so having like a common denominator, which has historically been either USDT or USDC, is very important to DeFi. And I think that as we get more confidence and you get a lot less noise out of the tether truthers and you get less issues like the one we talked about before with USDC, it does just give more confidence that DeFi, which is this it's effectively programmatic finance, but it can break when assumptions like a dollar's not a dollar come to fruition. And that has historically been something that has happened in crypto a bit. Tether's broken peg a couple times, USDC's broken peg a couple times, and it's always just been a confidence game. And when there's a lot of FUD around or when there's rumors that spread, that's when you get them depegging. But regulation like this just provides huge confidence that a dollar is a dollar. And when it's kind of backed by institutions, by banks, I guess there's like a lot less space for issues like that to happen.
Yeah. The way I see it is that DeFi and stablecoins have shown a path to accelerated global finance and have put the traditional finance world in check to do better. But at the same time, qualified and regulated products like compliant stablecoins are putting DeFi in check
100%.
to have a solid building block to build upon.
Yeah,
so we have this very good symbiotic relationship between DeFi and traditional finance.
I actually think that DeFi is going to be the driver of making stablecoins popular, not the other way around, because DeFi puts finance back in our hands, right, the users, and people want that. And so to get into it, you need stablecoins. So I love DeFi for that example, that it will be the driver bringing and pulling people into stablecoins.
Yeah, and I think it is somewhat ironic, as you allude to, that like this decentralized finance is so systemically dependent on a centralized, highly regulated stablecoin. But it is true because, like, at the end of the day, people don't want like when you engage with finance and with a lot of these products, you don't want a collateral that is highly volatile or fluctuates in value. You want to know that what you've got is a strong, solid unit of account, medium of exchange. And so I do think that it is very important for DeFi that there is this like robust framework that does allow does provide comfort and stability in stablecoins.
Yeah, so basically centralized bank-grade regulated products make DeFi better,
100%.
and DeFi makes traditional finance better.
I think so.
We like that. Any other final statements before we close?
We see a world in the future where, just like you in your investment portfolio, you might diversify your assets. We see that actually that consumers will use, whether it's banks, exchanges, regulated crypto venues, alongside access to DeFi. And that's what we're striving for, and similar to the likes of Anchorage, that's what we're focused on. How can we make bridges safer? Bridges at the moment are a concern, right? That's where we see a lot of security issues. That's something that traditional players coming into this space are just thinking about: how can we get a stablecoin in the bank, and how can we allow our users to transact on it? We're already thinking at the next step: how do we enable cross-chain? How do we bring ourselves closer and closer to DeFi?
My final statement builds off yours, which is a recommendation to all governments, sort of like a call out. Follow in the footsteps of the people who are already innovating, creating those frameworks. Europe, US, Kyrgyzstan, great example how much they've transformed their digital economy with this great framework they built. So it's a call out to the governments who haven't. Do it. Make a more inclusive environment while protecting your own citizens.
Thank you for your participation today.
Thank you.
Thank you.